Hi, and welcome to Academic Compliance Academy. In this video, I'm going to talk about governance and compliance, more specifically, corporate governance and dynamic compliance. So what is governance? Jeffrey Parson Miller defines governance in his excellent book from 2020 as governance refers to the processes by which decisions relative to risk management and compliance are made within an organization. So the behavior of a company is the result of governance. That is really interesting because that will be relevant in terms of dynamic compliance. To represent governance more, I will use the theoretical framework of corporate governance because it is one of the most applied theoretical frameworks and the most used research field within modern governance. So let's just look a bit on corporate governance to represent the G of the GRC framework, governance. The essence of corporate governance, what is that? So corporate governance is an approach to tackle a range of problems and costs that may apply to a company due to different interests considering different stakeholders. It might be internal stakeholders or external stakeholders. So I put up a picture here. It's just, there might be tons of different segmentations of stakeholders. This is just an example to show you that internal might be employers, managers, and external can be suppliers, society, government, creditors, etc. So when we want to align our behavior or the governance structure to secure some good relations or good governance depending on the expectations from the stakeholders, we're not that far from the element of compliance, because compliance also relates to the alignment of your behavior considering the expectations. So it's really interesting that there are some similarities here between corporate governance and dynamic compliance. Furthermore, if we look at some of the key principles of corporate governance, these key principles are transparency, accountability, and security. All three principles are relevant because what you want to do, the main objective of corporate governance is to limit agency problem, asymmetrical information, or any other cost that might come from having a distance between the company and the stakeholders, or not just a distance, but it might just be a lack of information flow between the stakeholders and the company. So what we want to secure here is transparency. We want to open up the company so the stakeholders know what is happening, what is your strategy, how are you gonna act in this crisis situation? What is your long-term strategy in terms of green policies, etc.? So we need to have this kind of openness to secure accountability, to align the interest of the stakeholders with the actions of the company. And that you do by good governance. So, but if we take on this element of corporate governance, what is the problem, or not the problem, but how does it differ from compliance? Well, there's one key difference when we're taking the governance theories in general and corporate governance and dynamic compliance, and that is the perception, that's the view. So what do I mean by that? So if we take on corporate governance, the view or the approach that you take in terms of making your good governance is defined as being internal. So internal refers to the aim and the gain. So who's gaining? Whose objectives are we trying to enforce? Well, everything is for the company. It's not for some external aim. We might have external stakeholders with requirements or want insights, transparency, etc. But the way that the company acts and secure governance structures and the way they want to optimize is in favor of the company itself. So we could, for example, I put out here internal. equals how do we internally act to reach good corporate governance considering our stakeholders. So the main perception here is that external factors and stakeholders are externally given. So a company might strategize, it might plan different things, but it will not necessarily consider itself a part of this changing external environment. So it doesn't consider itself as something that maybe pollute itself in the context that it doesn't consider itself as a problem of the external environment. Might make more sense later on, but it's very important to understand this differentiation between internal view and external view. How does society try to enforce corporate governance? Because what we want is just good corporate governance. We just want insights. We want to know what's happening because we can see that it is good for everyone. Stakeholders want it, society wants it, employees want insight in the company. And we can see through a lot of research that corporate governance and good corporate governance matters. But how do we force on a certain behavior without going in details and controlling corporations? Because we cannot do that. So what we have done in society and through regulations, we have put in some codes, some corporate governance codes. And the most applied code is probably the OECD code from 1990. So the aim is here to engage companies to react on their stakeholders to secure good corporate governance. So it's guidelines, it's soft law, it has nothing to do with hard law. And that might be a problem. Here you can see the video on soft law versus hard law. So when we need this from society, we have put out some corporate governance codes, and that will be implemented differently in certain jurisdictions, and certain companies are not just, they're actually forced to interact or just at least relate their governance structure to corporate governance codes. In that sense that, so soft law typically, if we just make guidelines, there's no forcible, we don't force it on corporations. But within the EU, we do have some rules that force larger companies, larger stock companies, to address corporate governance or good corporate governance codes. But how do they do this? They do it on a comply or explain basis. So they can say, okay, we comply to this guideline or this just element of the guidelines, or we don't. And if we don't comply, there needs to be an explanation. So every non-compliance had to be assessed or addressed with an explanation. But there's no enforceability because it is soft law. So that is society's aim of the approach to try to secure this good governance. So we have the aim, we have the view, and we have the approach. So let's just try to consider corporate governance with dynamic compliance, just contemporary compliance. So the aim of corporate governance is to minimize agency cost for long-term investment or optimal returns. Compliance, the aim here is to strategize, manage, and mitigate the alignment of core values to the behavior actions of the entity depending on external and internal risks and expectations. So here there are some similarities because we also know that good governance also want to relate to external and internal expectations given their stakeholders. So where is the big difference? Well, the big difference comes when we look at the view, the perspective. As I already stated, typical governance theories take an internal view because we do it in favor of the company. Our aim is to secure the company, not to secure external given aims that are not maybe even closely related to the company's aim. Here, dynamic compliance has another view, because dynamic compliance will both take an internal and an external view. So how do you do that? Well, you have to consider that dynamic compliance is based on a risk-based approach. So when you do risk, and when you say that your company is within a risk-based field of example given regulation, well, risks are never zero. And the risk can come from a range of things. We can talk about the risk of climate change, the risk of epidemics, the risk of anti-money laundering, and the risk of GDPR. We have a lot of different risk segments out there. And because of that, we need to align our company. When we talk about dynamic compliance, it's just not aligning in favor of the company. It's aligning in favor of the company while being in favor of society. So why should you take on society's aim? Well, you need to do that because it's written in the law. And when you're within the element of risk-based regulation, when you read the regulation, you will see that the aim is, example given, to reduce, that could be money laundering. So you need to secure that external aim, and you need to align your business behavior, not just optimizing, saying, okay, let's tick the box, let's do what the regulation said, because you are also applying risk to society by your actions. So when you're in a risk-based environment and within the risk-based regulation, you need to comply, and the approach you need to take on a dynamic is based on a dynamic approach. And here dynamic means internal and external. So you need to assess your risk both externally and internally, and the risk that you internally put out to the external sphere. So this is the change. This is a different perspective, and why contemporary compliance, dynamic compliance, has evolved from the GRC framework, because it takes a dynamic view. Instead of just focusing on the company and the profits or the optimal structure, you consider yourself as part of a society. And some of the aims of society are now put out in risk-based regulations. And you need to address this as being part of society. Thereby, you cannot do tick the box anymore. You cannot just read the regulation and say, okay, I've done everything that it says. You need to continuously assess the risk, continuously consider yourself as part of the problem. So you need to align your company aim with the aim of the regulation. And that's a new thing, because before you only had to address the external aims as kind of a stakeholder. But now you need to align society's aim of example giving, anti-money laundering, as a part of your own aim. This is what implies, this is what is a fundamental change considering the GRC framework and dynamic compliance, and the reason why I call it dynamic compliance. So we can also see it here in the last segment of approach. Instead of using corporate governance code, the new thing that we do is base it on risk. We use risk-based regulation. And by using risk-based regulation, you enforce the mechanisms and the aim of regulation to the companies. So you don't use risk-based regulation every legal field or in any sector in the whole of the EU. No, you only use risk-based regulation where the aim of society should be and must be also the aim of the company. That is the difference. And that is why we use risk-based regulation, because that's a way to get there. So this was just the video on governance, corporate governance versus dynamic compliance. In the next videos, I'm going to address risk management and how that applies similarities and differences to dynamic compliance. I'm also going to go into reactive compliance, so the old school way of doing compliance, regulatory compliance, versus contemporary dynamic compliance, and CSR versus compliance. So stay tuned, subscribe to the channel, and let's talk more about compliance.